Good morning, traders. Manny Cabrera from MDC Trading Academy with today's pre-market forecast for Wednesday, June the 26th. Let's quickly jump at our news items for this morning. As we can see today on Wednesday, 8:30, we have two pieces of news. We have the core durable goods and the durable goods orders. Really important pieces of news measuring our economic growth. After this, obviously Thursday, we have the beginning of the G20. We don't know what's going to transpire from there. News conferences, meetings, tweets, whatever the case may be from the G20. China's going to be there. Russia's going to be there. So it's going to be quite interesting to see what happens throughout the day with information. And then, of course, on Friday, we have information that's coming out at 8:30, 9:45 Chicago PMI, and revised UOM, including the continuation of G20. So keep your eyes open for those news items. Let's quickly jump to our analysis with our daily chart. As we can see, market is retracing off the all-time high at 29.6925. Expected move. It happened before. We established a high of 59.75. Market retraced to a key support area, and then it broke a little lower. So it broke key support areas. One interesting thing that's happening now, however, is that the market had their 80-20 crossover. And as you notice, just go back in history and look at the 80-20s. 80 is the purple, the 20 is the green, is the yellow. Look at every time it crosses opposite directions. When the yellow gets above the 80, market moves up. When the 80 gets above the yellow, the market moves down. So keep your eyes open. This is a good omen here for the market. Market can retrace, obviously, all the way down to here, to this level here. Find support at the 50 and the 80 and the 20 crossover. It can find support there if it decides to retrace that deep. Volume, obviously, is averaging 1.07, over a million. We like 1.1. Our ATR is strong. That's when the market seems to be a little bit slow at times, but that's just because the volume is a little lower. So just remember, whenever you want to develop expectations, or you want to solidify expectations, or you want to glean information for expectations, always look left. In other words, whatever is happening in this area here, just look left. What happened the last time that we were there? And as you see, we had one solid bar, and then we had another smaller bar. We came up again, and then we traced deeply. So just keep your eyes open. Market still has strength to the upside. It's just coming off the all-time high. So you just got to remember, it can go up, it can go down, or it can oscillate between areas. That's obvious. But the likelihood is today, and I'm going to show you that more clearly here in our projection chart here. Here's where we are right now. This is yesterday. Here's the market, obviously opening here. It ended up to the downside. It's coming to recover from this area, but this is the area here where most of the activity of the market is going to happen today. Now, what happens if the market breaks out of these areas? That's when we start to look at these potential areas. You see, then we start looking at the all-time high and above, and then we start looking at this low here and below. Remember, these are all excuse me, projection areas that we have brought from the past over to the forward in order to start considering potential areas of market movement. Now, more closely to our trade chart, we can start developing more of a hypothesis. Here we go. We had a market breakdown from the opening bell. It's continuing down this trend line here. It held, finally broke strongly. Now it's finding support here. Now, what are the likely scenarios here? Market can potentially retest this area here and then bounce back and try to find areas down lower. It can clearly break through there and just rush quickly, or at least consistently to the upside. Now, best scenarios of all, break above the intraday high, break above the intraday low. We're expecting, obviously, if it breaks here, we're expecting a strong run to the downside. Remember, we pick up speed when we're heading to the downside, but this is what we call a FOBO. Why is it a FOBO? It's a fake out breakout. Yesterday was this intraday low. Market attempts to continue higher. It does it. It breaks through, but it doesn't hold. It comes back and uses it as support again, the intraday high, intraday low, and then it continues straight through, breaking through the strong trend line and creating this current run to the upside. Now it's finding a little bit of support. So that's what we're looking at. So what we're looking at is what happens when it gets to here, and if it gets to here, is it going to break or is it going to retrace? How far is going to be retraced? We'll see that as the market starts to develop. As you start to read the market's newspaper, you start to see these clearly. You start to develop a hypothesis, and that's what you bring as your plan to the market. So either which way it goes. Again, here it is. Here's the market bouncing off this area. Expectation, obviously, what's going to happen? Is it going to retest this immediately here? And if so, is it going to hold or is it going to break? That's the question. Is it going to just completely break down and try to run quickly to this area here? whichever way it goes, we have a plan. That way the market does not surprise us. That way we stay 100% objective, non emotional, and pulling a trigger just like professional traders do. Thank you. Have a great trading day, and let me know if you have any questions.